we have taken loan from outsiders. That we call it as debentures. What we can do for damaged goods, you cannot sell it in the market. You have to sell within the premises only. Share capital or equity, preference capital, retained earning, debenture, term loan, venture funding, asset securitization. Remember, never take the name of equity shares under medium term. Hello everyone, this is your Adarsh sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So, we are in the session 3 of your topic called accounting. In accounting, we are doing financial management. Now, in the previous session, 1 or 2 sessions, we discussed about what is financial management, the role of financial management, functions of financial manager. In today's session, we will discuss about the sources of financial management. Now, so which are the sources of financial management? Like, normally we have long-term, medium as well as short-term. Now, we will discuss about all 3 sources of financial management. In the agenda, we are discussing about the sources of finance as well as short-term, long-term and medium-term sources of finance. Now, so we will discuss about first what are sources. Then in the sources we have what is short, long as well as medium term of finance. Now, sources. Now, in this first we'll go for introduction part. Later we'll discuss about short term, long term as well as medium term sources. Now, as per this, sources of finance for business are equity, debt, debentures, retained earning. Now, you know what is equity, what is debenture. Equity means there are shareholders. Whatever they have invested, we call it as, we treat it as they are the shareholders or owners of the company. Now, after shareholders, we get debt. Debt we call it as debentures. Now, debentures, it is nothing but loan. We have taken loan from outsiders. That we call it as debentures. Now, retained earning means, earning you know that every month whatever income you get, we call it as earning. Every month whatever income you get, we call it as earning. Now, whatever earning you have earned, in that some portion we reserve, we keep it safe. That is called your retained earning. Whatever earnings you have, we have retained. We have keep it as savings. That is called retained earning. I'll give you an example. Every month your salary is 10,000. Now, out of 10,000, every month 1,000 you are saving. Every month 1,000 you are saving. This is called your retained earning. Next, term loans, working capital, everything I explained you in the next slide. Now, letter of credit, euro issues, venture funding, etc. These sources of fund are used in different situations. We call it as short term, medium as well as long term. Now, they are classified based on time period, ownership as well as control. On the basis of time, on the basis of ownership and on the basis of the term, we divide the sources of finance into 3. Now, the sources of generation, it is ideal to evaluate each source of capital before opting for it. Before you choose for which is your capital, you should check which kind, whether it is a short term, medium or long term. Now, so these are the chart sources of finance. Now, in your examination, you need not to remember everything. You are supposed to remember short term as well as long term. Now, in this, I have given you detailed notes on this so that you can learn easily. But before you read the PDF notes, before that, you should know the meaning of each thing. Now, your job is very simple. Now, in a book, please write down the meanings, because later while reading, you will not get to know what it is. Now, on the basis of time, first one. On the basis of time, we have classified into your long-term, medium as well as short-term finance. Now, in the long-term finance, so which are more than 10 years, we call it as long-term. Now, medium. So medium, it is 1 to 5 years, we call it as medium-term finance. Now, short-term, less than 1 year or up to 1 year, we call it as short-term finance. Now, normally if it is a short-term and long-term, then we call it as up to 1 year short-term, above 1 year, we call it as long-term. But we have concept called medium-term also. That's why we consider your up to 1 year, it is a short-term. 1 to 5 year, it is medium. Above 5, we call it as long-term sources of finance. Now, as per this, we'll go for long-term, then medium, and finally we'll come for short-term. Now, in this, we have equity shares. You know that equity and preference shareholders. So, equity shareholders, we call it as owners of the company. Like equity as well as preference shareholders, what they will do means they will invest, they will deposit, or they will pay to the company. Like company required 10 lakh means 5 lakh can be taken from equity, 5 lakhs can be taken from preference. At the time of investment, you can choose whether you want to become an equity shareholder or you want to become a preference shareholder. It is left to you. Now, internal accruals. What are the internal accruals? Like small receipts are there. Internal means within the company itself. Like somebody has taken advance 10,000 or somebody has taken loan of 10 lakh. Now, the 10 lakh loan, when he will repay, that is called internal accruals. Or small scrap. Scrap means what? At the time of manufacturing, some damaged goods are there. What we can do for damaged goods? You cannot sell it in the market. You have to sell within the premises only. You have to call somebody like scrap. So all the scrap you can sell it for least price. That is called your internal accruals. Within the field or within the area itself, whatever income you get, we call it as internal accrual. Now, debenture or bonds. Now, debenture or bonds, we call it as like other than shareholders, we don't want public as owners. Company doesn't want public as a owners. What company will do? Company will offer, anybody wants to invest, you can, but it is in the form of loan. If you give me 10 lakh for my business, I'll give you interest. Whether I'm in profit or loss, every month for your 10 lakh, you will get interest. The debenture holders are safest players. Why? Because when a company goes wrong or good, the debenture holders will get their part of interest. Now, this is called debentures. Term loans. Term loans means what? Any loans you have taken for 20 years, 25 years, or you have taken any building construction loan for 25 years. That is called as your term loans. Now, ventures. Ventures means what? Group of people. They know that this particular business will grow higher. This particular business will give you higher return. So, newly startup of any business like small business, we call it as venture funding. 5 or 6 members, they will fund, and all the 5 members, they have high possibility of getting good returns. So, this is called as venture funding. Newly set up business comes under venture funding. Now, asset securitization, like you have your machinery, your buildings, your properties, your furnitures. What you will do? You want money. What you can do? All your properties, you make it as a pledge. You pledge it in the bank or some financial institutions. Now, once if it is pledged, what will happen? So, the financial institution, they will pledge and they will give you loan. Your property is worth of 10 lakh. So, what they will do? They will give you loan around 5 to 6 lakh. Now, if you are not able to repay that 5 or 6 lakh, after certain years, as per the rules and regulation, they will take back your property. The property will belongs to the financier. That is called your asset securitization. Now, I am not going in depth. In depth, there are some other meanings will be there. But for your examination purpose, I am giving you small or brief introduction. Now, international financing, euro issues, foreign currency, loans, ADR as well as GDR. So we have ADR and GDR. ADR stands for American Depository Receipt as well as GDR stands for Global Depository Receipt. Now, so American Depository or Global Depository Receipt, these are the revenue or these are the income. So, our financing part comes under international financing. Along with this, we have foreign currency, loan and euro issues. You know that what is foreign currency. So, these are comes under your long-term finance. Don't go in depth. Why? Because in your examination, hardly you may get 5 or 10 marks like, so explain the sources of finance. Just list out any 5 and give 3 to 4 lines explanation. Now, we're done with your long term. Now we'll move for your medium term finance. Now, preference debenture. Thus, equity, always remember, it is always long term. Why? Because once you are invested as an equity shareholder, unless and until the company wind up, closes, you will not get the fund back. So, that's why equity always comes under long-term sources of finance. Now, preference and debenture, if it is for lesser period, we call it as medium term. Your financial institution, government, commercial bank, all comes under your medium term sources of finance. Lease financing and hire purchase. Lease, you know that you have any machinery or property, you have given for lease basis. So whatever the 5 lakh, 10 lakh or 50 lakh, whatever as per the agreement, you receive, that we call it as lease finance. Now, once we're done with lease finance, we'll go for hire purchase finance. Hope you know the concept of hire purchase. The concept is very simple. Hire purchase means like you have taken a vehicle. Now, you have taken, for example, you have a vehicle. The vehicle you have given to some XYZ. The cost of the vehicle is around 5 lakh. Now, so the particular person XYZ, he cannot pay 5 lakh in single shot. Then what we will do? So, we will give him an option that I'll give you 5 years. How many years? 5 years. Every year, year 1, 2, 3, 4, 5. Every year, you pay me 1 lakh and along with 1 lakh, you give me 10,000. So, 1 lakh 10,000 he is supposed to pay. Why 10,000? That 10,000 extra fund because he is giving 5 years time. Now, second year, balance 1 lakh plus 10. Balance 1 plus 10. 1 lakh plus 10 and 1 lakh plus 10. So I have given as a flat interest. If you go balance out of 5, 1 you have paid means on balance 4 lakh, if you calculate, it will come around, it will be lesser than this one. So like this I have given calculation. Now, so every year 1 lakh plus 10,000, 10,000 we call it as higher charges. Now, total he will pay finally it is 5 lakh 50,000. So 5 lakh worth machinery or vehicle he is selling for what value? 5 lakh 50. So why do we call it as hire purchase? Why do we call it as hire purchase? Means now the first year we have given the vehicle to the XYZ. First year, who is the owner? XYZ or me? I am the owner because still he has to pay 4 lakh more. Second year, still I am the owner. Third year, I am the owner. Fourth, I am the owner. Fifth year, once he paid back 1 lakh plus 10,000, in the fifth year, XYZ will become the owner. This is called hire purchase. Now, the possession means vehicle will go to XYZ, but ownership will go when? After payment of fifth installment. Any doubt? Hopefully, no doubt. Now, so this is called your hire purchase. Now, we'll come for short-term finance. Now, trade credit. What is a trade credit like? You have sold goods to some ABC or some Raju or Ravi. Now, whatever goods you have sold, you have given him 6 months time. So, I have sold within 6 months, you have to pay me amount. So, this is called trade credit. Trade means what? Your business operation. In the operation, buying and selling, if there is any credit basis are there, like credit sales, we call it as your trade credit. Now, short-term loans like working capital loans. WC stands for working capital. So, what is working capital? Your day-to-day operation, whatever fund required, we call it as working capital. Like 5 lakh we have borrowed to maintain your business for 1 month. Like salary of staff, raw materials, your small repair charges, your printing and stationery charges. So your rent, electricity, everything all comes under your working capital. Now, for these purpose, if you have borrowed loan, we call it as short-term loans like working capital. Normally, these things comes for less than 3 months or less than 6 months. Now, fixed deposit for lesser than 1 year comes under your short-term. If it is 1 to 5 years comes under medium. More than 5 years, your deposit comes under your long-term. Next, creditors payable. You know that. What is creditors? What is creditors? So creditors, it is nothing but if there are seller, you have purchased from somebody, so he is called as creditor because you have not yet paid money to that person. Now, I am running a shop, mobile shop. I'll take mobile from some other shop for 10,000. I'll sell it for 11,000. Now, so whatever you have bought mobile for 10,000, you have not paid 10,000 to that person. Means that person will be called as creditor. Now, so creditor payable, factoring service as well as bill discounting service. These things are not important. So, because these things need much time to explain. Like bill discounting, you have a check, you want the check dated is next week, but you want amount now itself. What you can do, you have to go and request to the bank. The 5,000 rupees check, the banker will give you 4,500. 500 will be what? Discounting charges. Similarly, your factoring also comes. It is a big concept, but in your examination, these are not important. But you have to remember only points. Explanation, any 5 sufficient. Now, your basis of ownership and control. So, in your examination, this much sufficient. Only whatever shown in the green color chart, that is sufficient for your examination. These are for your additional information. Like your sources of finance can be classified on the basis of ownership. Like own fund and borrowed fund. Now, your basis of sources of fund can be classified on the basis of generation, internal as well as external. Within the company, if you are receiving or paying, we call it as internal. Outside, anything is receivable or payable, we call it as external. So, nothing to worry about these two concepts. So, only you have to concentrate on your basis of time. Long term, medium as well as short term. Now, later I'll give you time to take a screenshot. Now, we'll continue with the next slide. Now, Long-term sources of finance. We already discussed, but again, a definition about our meaning of your long-term. In this, long-term sources of finance means what? If it is asked for 5 marks, you are supposed to write this along with examples. Now, share capital or equity, preference capital, retained earning, debenture, term loan, venture funding, asset securitization. We already discussed in your chart the same thing we are going to write. Next, your medium term. Under medium term, again you will get preference. Remember, never take the name of equity shares under medium term. Debentures, lease, hire purchase, short-term loans. Short-term loans means what? 1 year to 5 years. Any loan taken from year 1 to year 5, we call it as medium. Your short-term, we have trade, credit, factoring, bill discounting, advances, short-term loans, receivable and payable. Finally, we have fixed deposit. Now, these are called as your short-term sources of finance. So, before saying thank you, I'll go back to all these slides. You can take a screenshot. So, these are the introduction part. Your sources of finance chart, long-term source, short-term source are medium, and this is your short-term source. So this is all about your today's session. We done with your financial management part 1. Theory part we completed. In the next session, we'll go for your ratio analysis. If you're done with the ratio analysis, means your chapter 2 will be ended. Thank you.